What are some of the tax strategies of real estate? Well, that is actually what I'm going to be talking about today. I'm going to get into that here in just a minute. But first, I just want to say there are so many good things about real estate that I love. There are a ton of things as far as building wealth. One of them is just literally the fact that you can use leverage. You have the leverage, and then there's the debt pay down. There's the appreciation. Properties increase in value over time. You can lease these properties out and literally have the tenant is paying your mortgage for you. There's tons of strategies that you can actually use. You can use the BRRRR strategy. I have a full video series of this on my channel. You can check that out. I'll try to put the link below. And then I actually put together an extensive guide. It's a PDF guide. I put this together. It's absolutely free. If you want to download that guide, you can just comment below. Just comment the word wealth below in the comments, and I'll send you a copy of the guide for absolutely free. But there are so many advantages and things that you can do with real estate that are just fantastic. But today I'm going to talk a little bit about the tax advantages. So when we think about real estate, sometimes maybe newer investors, they don't even really think about the tax stuff. They're just thinking about building wealth and all that. But there are so many really good tax strategies that you can use in real estate. So first of all, there is depreciation. And it's funny because, as I talked about a minute ago, your real estate appreciates with an A, but there's depreciation with a D. And that is basically over the life of the real estate, you are able to write off as a tax write-off the depreciation of the property. In other words, as that property gets older, things start to break down, and you can literally write that off on paper. So depreciation is a fantastic thing, and you actually now, with some of the new legislation, you can do a cost segregation study and actually accelerate that depreciation, which if you are considered a real estate professional, which I won't get into that on this video, but if you're talk to your CPA about that, but if you're a real estate professional and you qualify for that status, now you can not only bonus accelerate that depreciation, but that can go to offset other income that you have that may be active versus passive. So that's a really amazing strategy. I mean, it's something that I have personally used to minimize or eliminate my tax liability. Is can go in, basically do a cost segregation or two study on a property, which basically all that means is we're calculating up all of the items that can be, what their depreciation level is. We're front loading that on the front year and getting all that depreciation, the bulk of it on the front of that year, which helps me eliminate some of my income on paper. And that's a way that you can legally do that. This is how, like, a lot of the multi-millionaires and billionaires, this is what they do. This is the game they play. Another thing that's great about it is you can actually do a 1031 exchange. And what that is, I have some other videos that you can check out on the channel about that. But in essence, you can sell a property and roll the proceeds into another property and not have to pay taxes on the gains that you have. And you can do this over and over and over. And in essence, what happens is, let's say you 1031, you have a $200,000 property, and that property, let's say you have owned that property for 5 years. You've got a lot of equity in it. You sell the property. Well, normally that equity, you have a basis, and then anything above that basis, that's what you're going to be, in essence, tax on, plus depreciation, recapture. I won't get into all that. But you are able to then, if you decided, you could do a 1031 exchange, and there's some protocol you have to follow, and you can roll all of that into another property. So now let's say you roll that into a $500,000 short-term rental, and you keep that property for a handful of years, and it grows in appreciation, and you've got debt pay down. Now all of a sudden, let's say you roll that into an apartment complex. You can literally keep leveling up, and by the time when you get to the end, let's say that original house you own a 50-unit apartment complex. Well, when you pass away, that basis can actually step up to your heirs and in the current day, meaning that the basis steps up, and your heirs, like let's say your son or daughter, now inherits that property. They could sell it, and they don't have to pay all those capital gains taxes. So it's pretty wild, and that's just an example of another type of benefit. So those are two that I wanted to touch on. I don't want to go too long on this video today, but those are two huge things: depreciation, using the 1031 as a tool. And then there's other things, like obviously like having any business, you've got a lot of business expenses and things that you can write off. But yeah, definitely talk with your CPA. I'm not a CPA, so talk to your CPA if you're interested in learning more about all of the amazing tax benefits that you can get with real estate. But I think that definitely when it comes to tax benefits, real estate is one of those investments that is up there in the top. Obviously, you've got oil and gas and some other things, but real estate is a fantastic way to help you navigate legally avoiding or minimizing your taxes. So as always, I appreciate you watching this video today. If you have any other questions, comment below and be sure to subscribe and follow. I'll see you on the next video.